I started trading stocks in 1998. At that time, I'm 17 years old. I'm 44 years old now. So trading stocks was not new to me. And I started off, trading penny stocks, much the way the degenerate crypto traders start today. So, those guys have a special place in my heart because I'm sure, if I would have been born in that era, I would have been attracted to that too. So, but of course, I grew as an investor and actually knowing, holding assets that you would eventually want to hold what I like to call for 100 years. Is this an asset that I would want to potentially hold for 100 years or
Hmm.
have in my family for 100 years? Because, we're not going to live 100 years, but hopefully someone in our family will live 100 years. And so that became my investment philosophy. And, I was not really utilizing my TFSA because of the structure that I have. I was doing primarily investments in my corporations that I own. That just made the most tax efficient sense for me at the time. But I'll walk you through kind of where I was and, in my head, because things were changing in the world right from 2020 until now. Things have gotten drastically different. And I don't think most people actually noticed that they're getting different. And I would suggest most so-called investment advisors or, financial product salesmen, as I like to call them, really weren't thinking critically about what was changing in the world around us. And so I'm going to walk you through where I was, Trevor, and I'm going to share some resources with the viewers
All
here.
right,
So,
sounds good.
okay, so pulling up here, this is the U.S. gross federal debt to GDP, and I just tell people it's like when in doubt, zoom out, because if you're just looking on a 5-year basis, like maybe that does not look so discerning to you, but when you zoom out and you start looking at the U.S. federal debt to GDP, and it's like, yeah, this is a lot of Canadians watch this podcast here, but ultimately everything is based, the entire, fiat monetary system that we have is essentially based on the US dollar. Most countries hold US dollars as their reserve asset or US treasuries. So, and when you start to look at like what happened, the government's just entered into rapid spending when COVID broke out. But the thing is it's not like it came from a period of fiscal responsibility. The governments around the world were highly indebted before COVID happened. You can see in 2019, heading into COVID, they're already at 106% of GDP. And then, of course, this just accelerated throughout COVID. And, for perspective, that's the same level of GDP that was occurring, debt to GDP in World War II.
Hmm.
Okay.
Wow.
So I start to see that, and that's on the US side. And that's not just like a little bit concerning. That should be very, very concerning. Okay. You look at the same thing in Canada. And in Canada, we were, we went from in 2019 at 90% debt to GDP to 118% debt to GDP. Now
Hmm.
we had a kind of a similar but not quite as bad situation in the 90s. And what happened in the 90s is actually, the liberal Chrétien government actually balanced the budget in the 90s and got us back on a sounder fiscal footing. And that might be surprising because anybody who came out who was to come out with a balanced budget idea today would be seen as some sort of right wing conspiracy theorist. But believe it or not, that you go back 30 years, that would have been a liberal government. So that's how far the political spectrum has moved in that length of time. Okay, and so what you start to see is these huge levels of debt. But it's not just the level of debt that was concerning, it was the deficit each year. So, what happened is like you can see in the US is all of a sudden they're clicking along at a deficit to GDP of, call it 3 or 4%, okay, heading into COVID. And then they went, even in 2019, they're at 4.6%. So they're already at 4.6%. And then they just went hypernova, where it's, their deficit, in relation to GDP was 14%. We're talking spending the same amount, your expenses are exceeding your revenue by the same percentage of GDP as you did in World War II. We had like blown past any reasonable metric that was, that was available. But I saw all of the advisors around me, and they just weren't changing their course at all. And it's not something. I'm actually a very boring investor. When I started out, trading penny stocks, I learned that that's not the real way to build actual significant wealth, and certainly not on a risk adjusted rate of return. The predictability, the probability that you're going to generate wealth on a consistent basis like that is not high. But at the same time, when I start looking at these numbers, these are absolutely crazy numbers. Okay. It's the same thing in Canada. We had an immense level, like our deficit was 14.8% of GDP. Okay. And coming out of it, what had to happen didn't happen. Like what had to happen was basically, this was the point where, someone on the ship, in my mind, as I keep telling people, should have yelled, iceberg straight ahead. And it should have been massive, massive austerity that happened after the initial lockdowns in 2020 and early 2021. Whether you think the lockdowns should or shouldn't have happened, that's a totally separate discussion. But the discussion is, once they did happen, you had to pay the price for what these costs were, and these costs were immense. But it didn't happen, and we saw the absolute explosion of the M2 money supply. Okay, you had the U.S. going from call it $15 trillion in circulation to 22 trillion in circulation, in a matter of months. Okay. And it was very, very similar in Canada. It's very, very similar in Canada. We're heading into COVID, we had it's called 1.8 trillion in circulation. And then now today we have $2.7 trillion in circulation. That's $900 billion in the money supply added. And, I was looking around at this, and it was just incredibly disconcerting. And I just saw this level of acceptance from people, where it's just like they thought it was business as normal, and it should have been very, very obvious to people that it was not business as normal. Okay. And I start to look around, and it's like, where is mine and most of my clients' exposure?
Right.
It's like, mine and most of my clients' exposure is in Canadian real estate and North American equities or bonds. Like most of the exposure for myself and most of my clients is that's where it is, right? And I started to see that as an issue. And so, we could see that at this point, I believed we all needed some insurance. And I saw that, the financial community as a whole was really just not looking for that level of insurance for different exposures. And I first went down the initial path of, I'm going to start, looking at acquiring foreign assets. So foreign real estate, potentially foreign stocks for my clients, okay, either through foreign corporations or foreign trusts. And originally we bounced around a couple different ideas. Originally we thought about Bermuda, and then we arrived on the Cayman Islands. And the story was this: I was in the Cayman Islands, and so I actually was in the Cayman Islands early in January of 2022. And so in January 2022, I'm in the Cayman Islands, and this is the same time that all of the sanctions were coming down on the Russian oligarchs. And I'm sitting in the Cayman Islands at a lawyer's office, and I have a offer on a property in the Cayman Islands that I'm looking to acquire, because I need some, I need some or risk diversification against this, giant time bomb that we're all sitting on, which is the explosion of the money supply and the devaluation of our currency. And, I'm looking at how do I diversify this risk away from any one country? And how do I, help my clients to preserve assets? So I'm sitting there in this office with this lawyer, and I have this offer outstanding. We're talking about different structures, corporate structures and trust structures. And I see in the other office that they were opening the books for all of the trusts they had set up on these Russian oligarchs. And it was at that moment that I realized that these foreign trusts are nothing more than just pieces of paper. At the end of the day, these foreign trusts they're just pieces of paper. If the government wanted the money, wanted the assets, they were going to pierce the veil of these trusts and get the assets. Because at the end of the day, it was just a piece of paper held by a fiduciary who, in their own self-interest, when the government came knocking, they were going to rip up the piece of paper and give them the asset.
Yeah. So was that when you started looking into Bitcoin? Is that kind of where it was, or were you already looking at Bitcoin before that? Because I know we had the conversation. You said, it doesn't matter where we go, Trev. Like, they're going to get us anywhere we go. Yeah. We got to play a game of whack-a-mole here.
Start looking at, you start looking around at what different assets there, at what different assets that there are, and just give people kind of an understanding of how the financial system works. Like, where is the money and wealth around the world? And this graph here, the total wealth graph, is essentially like where the money and wealth is around the world. I'm sure you'll find maybe different sources with slightly different information, but it's a pretty good breakup. There's about 900 trillion American dollars of wealth assets in the world. The biggest asset class is real estate, $330 trillion of real estate. The second biggest asset is bonds. There's $300 trillion of bonds. There's about $120 trillion of cash. And the equity markets is, proportionally smaller at about 115 trillion, art at 18 trillion, gold at 16 trillion. And then you have Bitcoin at 2 trillion. Okay. Very, very small at that time. Okay. And I started looking very seriously at gold and Bitcoin at that time. And then I resolved in, I believe it was April or May of 2022 to start buying Bitcoin. Now, I actually had resolved to start buying both gold and Bitcoin at that point. And at this point, this is an insurance policy for me. Now, I'm not one of these I'm not one of these degenerate traders. I'm an experienced investor. So when I start looking around at assets, it's like I'm not going to put a whole bunch of capital at once. I'm going to dollar cost average for a predictable period of time. Okay. And so when I looked at Bitcoin, I at that point in 2022, I start buying, some gold every month, some physical gold every month, and I start buying physical Bitcoin. Okay. So not paper Bitcoin, not an ETF. I'm buying actual Bitcoin and sticking it on a hard wallet. And I'm dollar cost averaging responsibly over time. And at that time, we're talking May of 2022, Terra Luna had just blown up. So the entire crypto market was, entering into crypto winter. And to me, as an experienced investor, it's like I'm the opposite. Like, there's always that there's always that meme of when the price is high, everybody lines up to buy it, but when the price is low, it's like nobody's there to buy it. It's like when Bitcoin got hammered, it's like I start to be like, I think I should take a look at this right now. It's like, this seems to suit the problem that I'm trying to solve. Is I need some diversification against this system, and it seems to be entering into a period where it's no longer overheated. Okay. And, people will say, they're bubbles. It's like, no, bubbles in history are assets that go up, they go down, and they either crash entirely or they mean revert to their inflation adjusted value. Okay. But that's not Bitcoin. Okay. That's not, Amazon. That's not Tesla. That's not, any main asset class. It's like the true asset classes that are not bubbles. They go up, they correct, and then they continue to go up again. Okay. And that had been Bitcoin. And so when Bitcoin, starts to crash in 2022, I knew this was par for the course for Bitcoin,
Mm-hmm.
and I knew that starts to be actually a good buying opportunity. And so in 2022, I start dollar cost averaging into Bitcoin in May of 2022. I'm buying both gold and Bitcoin to diversify away from this system. Okay. And I continue to do that all throughout, what people call the crypto winter. And the crypto winter was, you saw Sam Bankman-Fried and
Mm-hmm.
FTX blowing up, and of course it went down further. So I started buying, physical Bitcoin at about $40,000 Canadian, 40,000 Canadian in Bitcoin. Okay,
Yeah.
and then I'm buying it all the way down to $20,000 of Bitcoin. Now, I didn't change my investment thesis just because it continued to go down. I'm actually more excited to buy it because I'm buying at a better price. I was willing to buy at
Yeah.
$40,000 of Bitcoin. Now it's on sale for 20. I was like, I think it's worth more than that. And at the time, I had a Bitcoin, a Bitcoin valuation, a projection of where I think it's going to go based on the overall supply of money, and then based on the overall supply of gold and how much, of that market capitalization that I think Bitcoin can capture. And I've been sharing that with people, at our boot camps for years. It's the same projection that I had in 2022. And some people thought I was crazy when I put that projection out, but I gave people, this is my bear case, and this is my base case, and this is my bull case. This is probably the range with 80% certainty. It's going to come, in between those two goalposts, and 10% certainty it does worse than that, and 10% certainty I might even do better than that. But with 80% certainty, it's going to be in this range, and that's going to be an attractive rate of return. I know. So I'm dollar cost averaging into Bitcoin from approximately May of 2022 until something started to change in about May of 2023. In May of 2023, what happened is Larry Fink and BlackRock came out and announced that all of a sudden they changed their mind on Bitcoin.
Mm-hmm.
And when I tell people that, it's like, oh, who's Larry Fink? It's like, BlackRock is the largest asset manager on planet Earth. When Larry Fink says something, when he does a complete 180 on something, you should listen. He's more important than Sally down at the Royal Bank or Jim down at TD.
Mm-hmm.
Those people are just salespeople. They get their marching orders from above. And you start looking at the corporate web of who owns who in the financial space. You start to see this very interconnected space with a lot of roads leading back to Vanguard, but BlackRock is the largest asset manager on planet Earth. So Larry Fink comes out and says that we want a Bitcoin ETF,
Mm-hmm.
and
That's
at that
huge.
time, I believe we already had a Bitcoin ETF in Canada. We had a Bitcoin ETF in Canada. There was no Bitcoin ETF in the U.S. And some people will say it was over at that moment. The minute Larry Fink said that they're coming in, I think BlackRock at that time had applied for 524 ETFs in the history of BlackRock and had been approved 523 times. Basically, it was like the equivalent of Mariano Rivera coming out of the bullpen with like a 6-run lead.
Yeah.
It's like this thing is locked down, right?
Yeah, I remember those days when we were having conversations about it, and you were like showing me like what's happening, and then after that, when the Fed was kind of fighting against Bitcoin and against these ETFs, but then the timeline came up and they didn't renew their suit against it, right? So I mean, the ETF basically was approved at that time. It was awesome.
That's right. So when Larry Fink did this, and like this is what I'm actually researching. So when people are just like you've memed into something and like it worked out for you, it's like no, I've been trading stocks for trading stocks for 27 years at this point in time. I didn't meme into anything. I dollar cost averaged something because it was a very viable problem that was there. I didn't get lucky, didn't ape into anything. And then Larry Fink makes this announcement. But at the same time Larry Fink's making that announcement, there was litigation where Grayscale, they wanted to convert their Bitcoin trust to a spot Bitcoin ETF. And they've been rejected by the U.S. Securities and Exchange Commission, and they sued them. Okay. They sued them. They had open litigation. And I believe that case was argued in March of 2023, if memory serves. And then what happened August 29th, they argue their case. Grayscale argues their case against the U.S. Securities Exchange Commission in March. And in May of 2023, Larry Fink of BlackRock does a complete 180. You know, he had said Bitcoin is for money launderers, and all of a sudden he says it's going to be the next global store of value. Does a complete 180 and said we're going to pursue a Bitcoin ETF. And then in August of 2023, what happened is the courts ruled in favor of Grayscale against the U.S. Securities and Exchange Commission. And they said that the reasons that the U.S. Securities and Exchange Commission had not approved the ETF were, capricious and arbitrary. Like, it was a scathing ruling. Like, we were reading the ruling word for word in our office, and we read it at the boot camp for people that were there, and it was a scathing ruling. But the fine print on the ruling is it was just one ruling. The U.S. Securities and Exchange Commission had 45 days from the date of that ruling to basically submit additional information and to essentially appeal the ruling. And so that was August 29 of 2023. Okay. And so that brings us to October of 2023. October 13th, to be precisely, of 2023. That's 45 days from the ruling from the Grayscale case. And lo and behold, the U.S. Securities and Exchange Commission did not appeal the case. Okay, so even though the U.S. Bitcoin ETF did not get launched until January of 2024, it was a done deal on October 13th of 2023. Anybody who was actually following it, I don't mean like posting memes or thinking hypothesis, but anybody who was actually reading the fine print, it's like it was a done deal. Like, there was no way out at this point. Like, if the U.S. Securities and Exchange Commission, like, if they would have tried to reject it at the 11th hour, like, I think they would be like probably potentially facing like personal lawsuits because like the courts had already ruled that all the reasons that they had given previously were discriminatory, capricious, arbitrary. Like, the ruling was as scathing as scathing can be, and they had a time period to object, and they just didn't do it. They let the time period lapse. And so in October of 2023, I think you remember, Trevor, me coming to you and say, like, I'm going all in. Like, and
I do remember.
I'm betting big. They're not all in, but like I'm betting big. Okay?
Yeah, like, because at that time, like we were trying to figure out, like, what is going to be happening with this, and then once that happened, and the U.S. finally capitulated, and the ETF was on deck. Like, that was the trigger. That was the signal that, oh my gosh, this is actually being taken as a real asset class by big banks, by big funds, by BlackRock, by Vanguard, by Fidelity, State Street. Like, all these companies are going to start bringing these on board. And it was like, it has nowhere to go but up, because they can't cancel it. They can't stop it. They can't say, oh, put billions and billions of dollars onto their balance sheet and then, outlawed. That is just not going to happen, right? So yeah, continue on the story. This is exciting. This is really cool.
Yeah, and so, like, although the U.S. doesn't, in my mind, they're getting an ETF. They just the world has not caught up to this decision yet. They're about to get the largest capital market in the world is about to get an ETF. But in Canada, we already have a Bitcoin ETF. And we'd had a couple of Bitcoin ETFs for years, and they're both TFSA and RRSP eligible. And so on that day, like, I hadn't actually utilized my TFSA. So, at that time, because I'm investing for various tax reasons in corporate structures that I have. So the majority of my portfolio that I have is held in corporate accounts. Okay. But simultaneously in September of 2023, I just sold some of the shares in my firm. So I have some personal cash, sitting there, and I was waiting to deploy. And I get this news in October, and I'm just like, yeah, it makes sense for me with the risk reward that's going to be here. I could use it to offset a bit of personal tax, but I hedge my bets a little bit, and I'm going to use my tax-free savings account. Okay. And so, the tax-free savings account that I had open, I think I had, $1,000 in it, bought some boring like Sun Life shares or something. And maybe I'm up like $200 or $300 or something like that. I liquidate that, and I contribute the entire lifetime limit at that time, which is $88,000 into my TFSA. and I go, I go all in on that. And I want to show people, because I want to, like, some people will say that they're in on things, but kind of, you put your money where your mouth is type of thing. And I got a screenshot here from people. Okay, so might be the most comical of TFSA screenshots that you're going to see here, but this is my personal TFSA at BMO, and I'm all in on BTC.B, non-currency hedge. I want the US dollar exposure. And so in March of 2023, I'm all in my entire $88,000 limit. Maybe I got $200 or $300 of gains in there. And so October 13th of 2023, all into BTCC.B. And then, of course, it rolls over in January. I get another $7,000 worth of limit. I buy it again. And then, just for some fun and some giggles, in January 2025, when I got my new limit, I diversified a little bit and bought some MicroStrategy. So then $7,000 in 2025 went into MicroStrategy. And so there it is. There's my screen receipt at 417,000. And that is my TFSA. So if anyone wants to doubt it, I brought the receipt that was there. And so it's funny, but at the moment I did that, it's like that wasn't the only money that I put into Bitcoin at that time. I bought more actual physical Bitcoin in addition to the stuff that I've been dollar cost averaging in. And oddly enough, when I bought the additional physical Bitcoin, what happened is like I actually got my accounts frozen, because I got my accounts frozen and I had to go on this long chase of, like, you transferred this money from your account to a Bitcoin exchange, and you bought physical Bitcoin, and now you're trying to transfer it off the exchange. And they were convinced that I was being kidnapped, or my accounts had been hacked, or they weren't talking to the right person. And this went on for days. And it was funny. It's like, it's like, this is, it kind of just reinforced the whole thing. It's like, this is why the Bitcoin ETF is going to work, is because in order to deploy significant amounts of capital, it's still difficult. It's still difficult through exchanges. Okay.
Yeah.
And so, if you're a billionaire, the hassle that you're going to get of trying to buy, tens of thousands or hundreds of thousands of dollars worth of Bitcoin, it's like, it's just not even worth it. Right. So it's like, whereas
FinTrack,
FinTrack, I didn't have any trouble at all buying $88,000 in my TFSA. It was no problem. It was smooth sailing. Right. So.